Today, we're going to be looking into those bigger time frames to see what stocks are looking like now, how we could maybe see those crash signals confirmed, but how we could actually head to the upside into 2025. We'll pay attention to all that as we get into some technical analysis for the SPY and the Qs, and we're going to jump around a little bit today. But the first thing I wanted to talk about was overall how Jerome Powell said something very interesting, and he said this note right here. Jerome Powell has said, we have avoided recession. Now, this is the moment when I was watching Jerome Powell or listening in on Jerome Powell, because I was working at the time, but just really listening into him, this really caught my attention because I was like, he is very clearly saying that, while at the same time throughout the speech, he is saying things like, we're uncertain, things can be uncertain. We need to still react to the data. Well, then you probably shouldn't confidently be saying we have avoided recession to potentially millions of people that are listening in. And at the same time, we can actually go and look at charts and see if we are in a better place ever since we actually started cutting. And that's why I wanted to show you the 10-year yield. The 10-year yield here has been climbing while the Fed has been cutting since September, and that is really affecting mortgages right now. So even though the Fed has cut, I think it's 3 times now since September, we actually noticed that the mortgage rate from that September cut has risen up. And this is where you need to understand something. And pretty much what you need to understand is people control the yields. Like regular people control where these yields are going. Bond traders can control them. Certain countries selling those bonds can control them. But the main thing is the Fed does not have the power to completely stop anything bad that is actually coming. They have less power than you think. They can affect things a little bit, but overall, all you need to do is look at the charts. Notice that the 10-year yield has been climbing while they have been cutting. Notice that the mortgage rates have been climbing dramatically ever since the first cut. If you actually would have taken a mortgage out before the first cut, you would have a better rate than when you have 3 cuts now. So that is what we want to pay attention to. And what can we look at that is really a warning sign of this? Well, if there is no possible recession coming, if we're going to completely avoid a recession, then tell that to the housing market, who has really suffered. I really want you guys to pay attention to this because the housing market is falling off a cliff. This is the housing sector. I'm sure people have talked about home builders as well. These are all falling right now. And the housing market is suggesting that this is not going to be a soft landing. So the lie that you have been told for a long time, it goes back to when they said inflation is going to be transitory. That ended up being a lie. Well, right now it is, hey, we avoided recession. And that is the biggest lie that they could have told you going into 2025, because we are about to fall off a cliff. And this price action is just a blip of what could be coming for 2025. Something that we do need to notice that has been happening with overall all of these, potential to avoid recession completely, according to our big dog, Fed Jerome Powell, Fed Jerome Powell. Well, then why is the dollar seeing the biggest up move we have seen in a very long time? If we really back this out to a weekly scale, you can notice what? Well, we were paying attention to right here. Right here was when we found that 4-hour divergence, said that daily could flip around, and you're testing that weekly 200. So this could be a big move to head to the upside, and that's a big problem. Now, we're going to get more into the dollar later on in this video, but I just want you to notice, well, if everything is dandy, everything is good, then why are we seeing a huge amount of cash? That is something interesting, and you should be paying attention to it. Now, we can go over to the SPY, and let's start to look at this bad boy, because we notice that there is a big waterfall of selling, and we have been saying waterfall of selling can come in anytime for the last couple of weeks, and then it did, and that's a big thing. So we were able to break through this and head to the downside. We curled down on the daily chart, so that's a big deal. But we noticed we went right to our buy zone. We went right to the the monthly expected move, and that is a big deal because that means we are 68% more likely to land in between these yellow lines with a 32% chance to land outside of them. And we even made a little reversal signal we were talking about. Everyone thought I was crazy for saying, hey, this thing is probably going to bounce and see some kind of rip up move, and the time to actually go short isn't right here, but it's actually on a retest of the 20. But we do have some reversal signals in here, so make sure that you are subscribed and you join us for Sunday's video, because Sunday's video we go into the shorter time frames, we update the weekly expected moves, giving you that 68% zone, and we even give you daily expected moves completely for free here on YouTube for the SPY and the Qs. If you want the rest of them, got to go over to Patreon, which is in the description. Now we can see here that we are bouncing from this level. Now, the way that we're going to be really on the bull side again is, according to your indicators, would be this is able to curl up into positive territory. But at this moment, it would be you retake 600 and you have a good shot to make a new high into 2025. Isn't that interesting? We do have a low volume week. I don't know if the selling is done. That's where it's going to be important to look into the shorter time frames on Sunday, and we will get into that. But the big thing that we avoided with this, and what I wanted to look at here, was this. Now, we talked about this when it was happening, and a lot of people sending me messages saying, hey, this is the crash, this is the crash, this is the crash, look at the weekly, it's crossed over. And all I said was, hey, look at that bad red day. Okay, watch. That has 2 more days left in it, so we could get rid of that signal very, very quickly. It doesn't mean something bad can't happen right now, but we unconfirmed this signal right here, and that is a big deal. Now, you are technically seeing what you would consider a confirmation on your RSI, so this can continue, but we want to pay attention to if this is actually crossing down on the MACD and if we are breaking through the channel that we've been in for a long time. So those are the things we mainly want to pay attention to, because that is where we can actually see this monthly curl down. And then you might have a period of time where maybe we even have a bear market, which is fantastic, because we love bear markets. We love when volatility is higher. We catch those little 30-minute moves, those little 2-hour moves. It's fantastic for a trader. And for Christmas, just to let you know, we put out the course again. We put up the course sale for Christmas, and it's going to go through to the new year. But look at that for if you have time over Christmas, maybe you have a little bit more time to learn. You can learn how to invest. You can learn everything about how to use these monthly and weekly moves every single time. And it's a great time to do it, because when volatility is higher, this is built to make you lose as much money as possible. It's truly, this kind of behavior is there to make you lose. Everyone lose as much money as possible. So if you have an edge, you can get that down in the description. The full technical analysis course will really help you for times like that. And look how high up that this MACD is. It looks like we're about to head into one of those times, and you do have a weekly signal here that is suggesting that it could be right around the corner. That being said, we have not confirmed it yet, so we can always buy ourselves more time. That's where we have to look at the daily scale, look at where we're at, and say, do we have the signals that we see at major tops? Well, at major tops, most of the time you will see that the SPY will go make a new high and we'll make a little divergence here. And the Qs won't be able to. The Qs will actually react up. Look at the Qs down in our buy zone. That waterfall of selling came in, exactly what we're looking for. We could head lower, right? We can always head lower. This is just pulled back, but the Qs, if they are going to go up and make some kind of lower high, that is something that we will really pay attention to. If you start to see this look after a low volume week like Christmas week, or going into the first week of January, I would watch out and be very, very cautious. That is why we are warning everyone right now and telling you about the conditions that you're in right now. You need to be managing risk. And in the course down in the description, we actually do show you a way to manage your trade in real time. You know, we talk about stops a lot. Stops are great. That's fantastic. But we know that some people can see on the charts where you put your stop in and then they know that order's there, they go, they wipe out that order, and then they wick the thing back up. So what we do is we actually physically manage our trade so that we can be in control the entire time as a trader. But something that I would be looking out for over the next couple of weeks is if we get a look that is a lower high from the Qs and actually the SPY sees some kind of rapid move in the upward direction to create a divergence. So real quick, I just wanted to show you the risk. The risk here is that the housing sector is actually telling us about the recession coming, while the talking head who wants you to believe everything's dandy out there is telling you the opposite, that we're going to avoid recession. And I'm just telling you right now, these charts look way too similar for me not to pay attention to. And you'll notice one thing here. Look at the low for the housing sector over here on the right side of your screen. You're going to notice the actual low where we created that bottom, we started to move in the upward direction. It was just a couple of months away from when the overall Qs found that sturdy low and ended up heading in the upward direction. So we'll notice here that the housing sector was actually able to call that we were going to head to higher prices for assets before the actual Qs were, and that's on the left side of your screen there. So we can pay attention to this, and now you are seeing that it is starting to fall dramatically and it's about to cross over on its MACD. And you will also notice that on the MACD, we do have the highest reading that we have ever had for the housing sector, and you are seeing that right now on your screen because the MACD looks like it really wants to roll. And then we go look at the Qs and we see, hey, that is also at the highest level that it has ever seen for for the Qs. So what do you think is going to happen if the housing sector does roll? The Qs will most likely follow. This was just a short moment to show you guys the risk in the market right now from some kind of downturn, and the housing sector is suggesting that it is there right now, and the Qs are just later to react, which we notice from looking at the bottom that housing does react first, then the Qs follow. So we'll see if this is able to confirm for the housing sector, but I want you to be aware of the risk out there if you are an investor for a long period of time. That's where I wanted to talk about the dollar and which one seems more likely. Does it seem more likely that we are going to see the dollar go up and up and up forever, or does it seem more likely that we are actually going to see some kind of upward move for some kind of Christmas rally, maybe into January of 2025? This thing can play out in a lot of ways. We're just going to pay attention to those times for weakness. And right now, you actually do see a potential for divergence here for the dollar, right? We caught this down at the lows. You can see the rejection divergence down at the lows. Very, very good. We even had a 4-hour divergence in here that helped us out for when that thing was really going to rip. That's awesome. And it was in one of our zones, so that's even better. So what we're paying attention to is now you're seeing a signal like this one in the opposite direction, which means if the dollar does cross down, that could mean people are going out of cash and into stocks, and maybe we need to retest in a buy zone, but that could be short-lived. In early January to mid-January, we could actually see the dollar start to scale up again. The main signal that we want to be paying attention to from the dollar isn't on the weekly scale, even though that thing is skying to the upside. It's actually on the monthly chart. Look how close this is to crossing. If this crosses up by the end of December, that is going to mean some bad things are coming for 2025. Now, we've talked about this before in our Saturday videos, how the dollar can bottom first before we actually see a top, and we have those marked off on your screen. Notice the dollar bottoms first, then we see something bad. The dollar, well, this was actually COVID. That was a little bit more of a random occurrence there, but you still had the reversal signals that we showed you on the SPY and the Qs a little bit ago. You still had those same signals, so isn't that great? You just didn't have the move up from the dollar. It kind of was at the same time. Now we'll notice here we had going into that 2021-2022 period where we had the bear market, if you want to call it that. Well, we noticed that the dollar bottomed first, and then we got too high up and we went positive, and that is really where things started to scale up, and that was when the top was in for 2022. So we'll pay attention to now, because what? The dollar has a strong bottom, it has a strong base. Maybe it goes down to retest its little breakout area somewhere in here, or down into our buy zone with some kind of pullback, and then we actually see this thing cross on that MACD. But if this crosses in December, you could see ugly things right now. Just note that that is crossing in positive territory. So once this does cross, it can come in pretty quick. So I'd be paying close attention to January of 2025. Why are people about to run to the dollar all of a sudden? We are going to get into some individual stocks, but I just wanted to show you volatility, because the other side to that SPY crossing down with those divergences for your MACD and RSI on the weekly scale for the SPY, on the weekly scale, almost crossed this week, and this was skying through the ceiling. And what did I say when we were closing at these levels? I said, watch, you have 2 more days. They like to do this where they shoot it up, they scare everyone, and then you see this wick down by the end of the week. So be calm, be patient. And we'll notice that this was crossed at one point. Now it is not crossed, which means we might have bought ourselves a little bit of time. But when this does cross, we want to be paying very close attention. So something that I'll be paying attention to is the daily scale. I want to see if this reverses down and is able to reverse back up. Now, we do have some things to look at on the shorter time frames here. Volatility technically being down by 23, a little bit over 23% on Friday does mean we have an 85% chance to see an up day. Or I'm sorry, an up day in volatility, a down day in the market. So a down day for the SPY in the next 2 trading sessions. That would be Monday and Tuesday. So we're paying attention to it. We know that there could be some kind of pullback. It doesn't mean some kind of massive drop. It can be, but most of the time you'll notice it's some kind of consolidation or some kind of drop to go gain some buyers. We'll see on Monday how that shapes up. And we can use weekly expected moves to really help us out with that throughout the week. So we give those out on Sunday. But we notice here that the daily scale, what am I leaning towards? I'm leaning towards this. I'm leaning towards this. Now, this was able to go positive, so I don't think you're going to see this triple thing going on here. I actually think this could be brief, where you react down dramatically, like everyone says, oh, we really did avoid recession. This is going to be great. We head down towards 1212. We'll pay attention on the shorter time frames as well, but on as far as 1212 goes, this is where extreme greed can come in. And this is something that actually really bugged me looking at some other YouTubers. A lot of YouTubers have pulled up fear and greed recently and stated that, oh, we just went from extreme greed to extreme fear in a matter of days. We were never in extreme greed over the last month. Just so you are aware, we were not in extreme greed at all over the last month. We have been neutral. We have been in neutral for the last month. A reading of about 55 for the last month. We have been about neutral, and then the selling came in to put us in extreme fear. You never had that swing towards extreme greed that these people are talking about. I don't know why they are saying that when you can literally just go look at it, pull it up for yourself. I don't have time to pull that up right now. But I just wanted to talk about the fact that, hey, this could get all the way down to 1212. We could get some kind of Christmas rally. We could rally into January of 2025 and we could start to move up. If that would come down like this and then we see a reaction from 1212, we might be getting a divergence really, really close to the center line, right when everyone thinks they're safe, right when everyone thinks everything's good, everyone's happy after Christmas, everyone's going into the new year with a positive attitude and ready to be bullish in this market. We can see something bad happen. We'll pay attention if this is going to make multiple points of divergence, okay? We can see that in the shorter time frames usually if they are going to make those signals. So come back for Sunday just because we will go into the shorter time frames in case we do see that down day in the market and an up day in volatility in the next 2 trading sessions. This is where we want to bring up these big stocks and we want to see what they look like. And right now you can pull up something like Apple and notice, hey, we are creating a divergence on the weekly chart. We can always buy ourselves some more time on the daily. We're going to talk about that in a brief moment. We will notice though that previously in the past, when Apple is going to go through hard times, it can be a little wonky. So we have to be prepared if things get a little wonky. That's where we'll pay attention to those shorter time frames. We'll pay attention to daily charts and 2-hour charts to really help us out in seeing, is this going to continue to drop, or does it have a good probability to bounce? That's what we're going to be paying attention to. But this is a warning sign, right? This is a warning sign because the last time Apple actually saw a pretty decent sized corrective move, we actually just saw a double top and it was very, very simple. So is it going to be as simple as last time, or are we going to be able to leak this out for quite some time? You know, we could leak this out for a long time and see some kind of upward move into the end of 2025. That is why right now you want to be paying attention, but we also want to pay attention to these 3 points: January of 2025, March of 2025, and then October of 2025 are going to be the 3 main time frames that I see where we could experience something bad with these markets. But hey, we'll look how these signals play out. Right now, the weekly scale is showing divergence on the MACD and RSI at the same time, and I want you to look at the daily scale, because the daily scale is suggesting here, and this is where going into the shorter time frames will really help us throughout next week, but the daily scale is suggesting that it's needed a pullback for quite some time, even something brief like this one, right? Something like this. Well, what would be a great thing is if we retested 236.36. Now, if this came down to this area, that would be fantastic for a setup for a simple swing trade to the upside. That's why we have the swing trading course down in the description, but the full technical analysis course is on sale as well, and both of those would be great to take during your Christmas break. I'm just saying, it would really give you an edge going into 2025. Try to start fresh. Now, what we notice here is this is really high up. So do I want to be going long for 12 months here? No, I most likely at least want to see some kind of pullback to see that swing to the upside. But on the weekly scale, you're just going to notice, I mean, I have divergence there. That is very likely to roll over a monthly chart. And that's a big problem for Apple. You are still holding the point of divergence for the monthly chart here. The last time where it was a good point to invest was when that monthly curled up. All right, we curled up right here and we saw some upside, but now you're starting to stretch this thing out a little bit too much and you're starting to form weakness on weekly charts. So be aware that this monthly is really, really high up and that can start to tumble really quickly because Apple did not get too affected. I mean, if you really look at this, Apple did not get very affected by whatever happened this week, and it's just heading in the upward direction again. That is why I was really paying attention to Apple and NVIDIA, and I was like, this doesn't seem that bad. It seems like we're going into the buy zone. We're going into a monthly expected move for the SPY. So those are the things that we pay attention to. And it really helps you stay calm as a trader, having those kinds of levels and understanding what they are and how to use them. So we want to understand here that we do have the weakness on the weekly scale. We do not have it on the daily scale. You have a simple little divergence maybe forming right now, which would more so be seen on the 2-hour chart. If anything, what we want to see is, do we actually pull down or do we just go ecstatic for a moment here? here and then we see something bad in January? Or are we actually going to pull back with Christmas week because of Apple's look, and then we end up going higher into January of 2025, and we more look for the end of January of 2025 to set up some kind of reversal signal, which would start the domino effect. These daily signals can roll over the weekly signals, then the weekly signals can roll over the monthly, and guess what? Then you most likely do have a stock market crash. And we see this very clearly from stocks like Tesla, who have ripped and ripped and ripped to the upside, and they at least got a simple pullback, but you do not have divergence on the MACD, you do not have divergence on the RSI at the same time, so I'm paying attention to this level. You notice it's not there. So what does that mean? Well, if we continue to pull back with that Christmas time, and then we're able to curl up over time, it would suggest that if we're able to hold up, we can see a move higher, and that's something I really want to pay attention to. I'm not seeing the weakness on the daily chart for this one. I'm not seeing the weakness on the weekly scale at all for Tesla at this moment. I just see a really, really high up MACD. So Tesla is a different kind of look, and this is why it's so interesting to me. And I still don't believe it will be safe. I mean, we're making monthly divergences here. So if this is able to cross down on a monthly chart, where would it be? It would be negative. So if we go through something bad and Tesla actually is affected by that in 2025, which I don't believe it will be safe unless it has a big short seller problem, well, if this is able to curl down, it would suggest that you are going to break 180.92. You might even break these lows down here from December 2022. You might even break these lows from October of 2020, and you might actually end up heading down to the COVID lows here, which means what? These are all suggested things. We're just paying attention if the stock is affected by it. But if this monthly can curl down, wouldn't you love to get some Tesla for $30? That's what we're talking about, and that is something that can genuinely happen in 2025. We are seeing a moment where we have an administration coming in. They want to get rid of all the things that prop us up and make us look like we have a strong economy, while really individual people know the economy is not that strong. They know that they're struggling at the pump. They know they're struggling with eggs. They know they're struggling with groceries in general. And that is something you need to pay attention to, because that is the actual economy. The actual economy are the people participating in it and how they are being affected right now, not the numbers you're seeing with GDP that we go into 3 times the amount of debt every single time to get that reading of GDP. So I would really be paying attention to the fact that these things can tumble, and just really think about it for a minute and be like, everyone on the media is telling me that everything is fine. That is exactly what happens before anything bad actually does happen. Everyone tells you it's fine. I don't know if it is ignorance. I don't know if they are lying. I do not know those things. I assume we will find out over the next few years. But just note that these things can tumble, which means potential for opportunity for the people who can see it. Amazon is still holding a divergence point on the RSI across the way, and you'll notice we had the divergence on the monthly scale, and look how much it affected Amazon. I mean, Amazon came down to the lows, not even the 2020 lows, right? Not even the 2020 lows. They came all the way down to potentially where we actually saw in 2018. So we could experience one of those moments again, and it actually could get a little bit worse because you have another point of divergence, but we had that on the RSI. Now we're making it on the MACD, coming to an even level. So only grade 2 there for that divergence there on the MACD, but we notice that this is very downward for the RSI, which just tells us if this happens early on, in 2025, Amazon can really suffer. That is a big, big divergence. Now, what do we notice here on the weekly scale? What are we creating right now? The divergence that likes to turn over the monthly chart for Amazon. So if this thing wants to buy some time, it's going to have to see a daily turn back up into positive territory, and that is something that can really help us out here. If we do experience more pulling back into these areas, and then we actually curl up, we might buy ourselves that time into January of 2025, and then we can actually see these signals prove themselves. You want this first signal here because this can create that domino effect where this momentum shows you, hey, this is sick, now the weekly is going to cross. The weekly will then cross and say, hey, the weekly is sick, and now the monthly is going to cross. And you have yourself the potential for an extreme bear market, in my opinion. And that is what can really benefit you. Bear markets are where I'm able to make the most amount of money. I'm not gonna lie. They are my favorite markets because when volatility is higher, the swings are bigger. As traders, we should love that. And if we're paying attention to the right things, if we understand weekly and monthly expected moves and how to find reversal signals around them, it can really benefit us. And that is why for this Christmas, I am putting out that sale right now. So you can get those down in the link in the description for the cheapest prices right now, and that's probably not coming back until next December. Literally, I'm not going to bring it back down to these prices until next Christmas, because I think this is a great way to get people to learn. It's a great time for people to learn. So we're going to do our best sale for every single Christmas. We noticed from stocks like NVIDIA, and this is what I was watching, I was like, if we're really crashing, then NVIDIA should really be going like this, right? NVIDIA should really be tanking. It's just not. Why? Because it was already in our buy zone. We were paying attention to 127.74. We were marking that off very cleanly because that is our breakout. And guess what? That is where we were suggesting if this head and shoulders plays out, people are going to think it's going to go below that. We were saying, hey, watch 127.74 because that's where I see support from that breakout area. That's where we like to test a lot if we want to actually head higher. So we want to pay attention to the fact that NVIDIA was nice to us. It gave you the daily divergence, and look at the bad things that happen. Now you have to be aware of lower highs and things like that on these daily charts. If this just curls up for a few days and curls back down, where is it? It is negative territory. So that means we most likely will cut this low and head lower. And the big problem that NVIDIA does have here is it has done something that a lot of charts have not. It has confirmed divergence on the weekly scale for the MACD and the RSI at the same time. We pointed this out a couple of weeks ago, and that's where we said, hey, there is most likely going to be more downside. This one here, we were like, hey, that's a positive bar. We can learn a lot about this because that's a positive bar. We always have the chance to actually go higher if that's on a positive bar, and that could be a blip. But the next week tells us, hey, we're going to head to lower prices. We head to lower prices, and now that daily scale looks like it might want to bounce from here. So if the weekly is able to curl up, that could be brief, but by the end of January, we could see a new all-time high for NVIDIA, and we could actually see NVIDIA tumble with a triple divergence on the MACD and RSI at the same time. This is that bullish scale, the bullish side, right? The bearish side is we go make that lower high very quickly, and then we end up turning down early in 2025. So we have to be paying attention to those shorter time frames. That's why you're subscribing today, to get those shorter time frames, get those weekly expected moves on Sunday. I could go through these for hours. I could literally show you all of these stocks that are going to these all-time highs. Weirdly enough, I might not be able to do it for hours because it's only a few stocks that are really holding up the market at this point. You have some of the worst breadth that you've seen. If breadth can come in, we can see those new highs, but you have the worst breadth you've ever seen. And you're at a moment where they're telling you everything's fine. We've avoided recession. Everything looks great. And we have terrible signals while they are saying it. So are they ignorant or are they lying to you? At this point, I think they are lying to you, just to be genuine. Because I think that they know this is a big problem. I think they're going to need a lot of money. And so what do we see at the exact moment? We're starting to see the highest levels of the MACD touched with the highest amount of participation from American households. We are seeing the highest participation, meaning the most that the American people have ever been invested in these stocks that are at these extreme highs is at the highest point in history right now. And that is something very worrisome going into 2025, because that is actually a sign that bad things are most likely going to happen. So be very cautious. You have these things that are really, really high up. And if you just see a weekly pullback, if you just see a monthly pullback, then you can make a better decision going forward on if you want to be bullish. If I have no investments now in the market at this point because I think I'm about to get a fire sale, and I think there's about to be an opportunity. If this monthly chart for NVIDIA does curl down and it holds up at 95 and curls up into positive territory, I'll be in on that move. I'll be in on this if we actually experience a crash and we go down all the way into my buy zone, down towards the bottom of that is $32, and then we curl up into positive territory. I will get in there, but I refuse to invest at these levels. And that is what we really need to start doing as investors and as retail investors, because we need to start making right decisions. And if you want to start making right decisions, click those links down in the description. They will genuinely help you, and many, many people can tout about that in my chat every single day. I don't just leave you behind and give you the course and say, here you go for it. No, I go live every single day. You can personally come in and I will answer your question live. And if I can't answer it live, send me an email, right? I don't want to leave you hanging. I think it's important, if I'm going to call myself a teacher, well, then I need to actually help teach you through that whole process, not just give you some kind of book or course and then leave you on your ass. I really want you to learn these things, and I'm very, very serious about it, because the reason I started this channel was to help retail traders know about how to actually utilize these type of things, these indicators, these bars that you see on your chart. You just see bars on a chart. I see opportunity, I see weakness, and that's the big difference. If you want to see that, check those links in the description. The best thing for the main takeaway is to kind of prove it at the end of the video, in my opinion. And this on the left side of your screen is a weekly chart. We just showed how the monthly looks like it wants to roll over on the monthly MACD for the housing sector. We have this housing sector up on your left. We have the Qs up on your right, both on weekly charts, because we're looking if there was weakness to tell us that the housing sector had this big drop coming and that the monthly could cross. And you'll see, hey, look at this. The housing sector actually did confirm this divergence right here, and now we're at risk of curling over that monthly chart right as we have someone come out and say that we have avoided recession. And I want you to see how the Qs might just be a few weeks behind. So be very, very cautious. Learn how to manage risk, manage your risk, manage your risk. We're going to be saying that a lot over the next few weeks, and things are about to get really, really volatile in 2025. So you might need to understand how to actually know when these things are going to bounce, how to catch weakness, how to catch strength, and that will really help you out as a trader. Thank you so much for watching this video. Genuinely, if you watched till the end of the video, thank you so much, because I think you have the highest likelihood of actually taking something away from this video and applying it to your trading. And then understand that you can be accountable the whole time. And if you make a mistake, use it as a learning opportunity. What did I do wrong? Go back through the charts. Did I not manage risk here? Those things will really actually help you as a trader, not just try to get rich quick. The fast way is the slow way, but it can get a lot faster if you know how to trade things in a bear market. So thank you guys for watching. Thank you for liking. Thank you for subscribing. I hope you have a fantastic weekend. Get reloaded and ready to go. And then Sunday, come back for those shorter time frames. And then Monday, be ready, because I think we have a low volume week and we could see some interesting stuff. All right, guys, peace out.